And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. Today, can an ETF be a platform for climate change? Earlier this month, engine number one came out of nowhere and won 3 Exxon Mobil board seats after a 6-month proxy fight. The company says Exxon needs to significantly reduce emissions and move toward a cleaner energy strategy. Last week, they launched the engine number one Transform 500 ETF. The symbol is VOTE, V-O-T-E. Get it? What's next for engine number one? Let's find out from Jennifer Groundsio. She's the CEO of engine number one. Jennifer, thanks for joining us. Also joining us by phone, Arnie Nowak, head of Systemic Investment Solutions for the Americas for DWS. He runs 2 of the largest ESG ETFs. That's the X-Trackers ESG Leaders Equity ETF. The symbol is USSG. And the X-Trackers S&P 500 ESG SNPE is the symbol there. Jennifer, back to you. You won the proxy fight with Exxon. Now you have an ETF to buy shares in companies you're going to use in upcoming proxy fights. Can you explain to the viewers how you're going to use this ETF and what you'll be doing with it? Explain the strategy behind it.
Thank you, Bob. Engine number one, we have a new paradigm. So as a firm, we are looking to take data and do a better and better job of how the impacts that companies make link back to their long-term economic value. And so as a firm, we'll do this in a range of ways. We think it's time for investors, whether they're public plans, wealthy families, or frankly, millennials and personal investors. It's time, and there's a demand for people to be active owners. They want to be activists. They want to have their views reflected in what these large companies do and how these large companies manage for long-term economic value over time. So what we've done with the engine number one ETF is we've created a product that simply holds the largest 500 companies to start. So passive isn't bad, indexes aren't bad. And then we are long-term owners and long-term managers of those companies. And so we'll be very active. Every year we'll be very assertive on how we vote all of those shares on the behalf of the clients. And we also, as the fund grows, have an ability to have conversations with these companies and be very active on how they understand their impacts today and how they drive to long-term value over time. So more to come from us on the specific way we're going to work with some of these companies.
Well, let me try to nail you down a little bit here. Are your next target going to be a specific target like ExxonMobil, or suddenly you're going to be involved in a number of different board fights with a number of different companies? Give me a sense of the roadmap here.
Yeah, if you think about traditional activism or traditional impact activism, like what we did with Exxon, that's a very big deal. And there's a lot of work ahead on that one, I would say. And so our objective is not to always do something that's as big as Exxon. Our objective is not to always do something where there's a proxy fight. There are a couple of companies that we're already looking at and working with that actually are positive examples where we think they're doing the right thing in understanding transformation in their industry. And so they may actually be undervalued today because they're not getting credit for decisions they're making that will drive long-term outperformance. So to answer your question, in every case in the Vote 500, we will be active voters. Sometimes we will do a campaign that's as big and leads to a proxy battle like in Exxon. And in many other cases, we will be working with these companies with the data to show them how they can address impacts of their businesses, whether they're on customers or workers or communities, or whether they're on the environment and on climate, and help them realize higher long-term value. So there'll be a range of ways that we work with these companies.
You know, Arnie, what I like about this particular ETF, it's a little unusual, but what I like about it is it's the intersection of 3 very interesting themes. Number 1 is ETFs, number 2 is ESG, and number 3 is activist investing. I'm wondering what your thoughts are here. You run 2 of the largest ESG funds that are out there. How are you participating in this debate? Are you planning to take a more activist stand, or the company itself that you represent, DWS?
Thank you, Bob. And first of all, congratulations to Jennifer and the team for the launch. I think it's a very, very interesting launch, and I'll keenly be following the product. And Bob, with regards to our portfolios, and in particular, let's say SNPE, you can think about it as very similar. There's 2 layers to our process. On the one hand side, we follow the S&P 500 ESG index. So already the companies in which we invest are the best-in-class companies of each industry group from an ESG perspective. And then on top of this, at DWS, we have a history of engaging with proxy voting and engaging with companies globally as a global asset manager on ESG-related issues. So I wouldn't necessarily think of us as an activist investor per se, but we, in all of our financial and stewardship considerations, globally take ESG considerations super into account, and it's incredibly important for us, and has been for a while, in fact.
Yeah. Jennifer, your campaign with Exxon was successful because you enlisted the help of Exxon's biggest shareholders, the BlackRocks, the Vanguards, the State Streets out there. How confident are you that they'll go along with other proposals down the road? I mean, do you believe you have a solid climate change voting bloc? Does that actually exist out there? Have you created it? I mean, what's your sense about that?
Yeah, I think in terms of how other companies vote over time, you should ask those companies. I would never want to speak for them. But at Engine Number One, the way we think about it is there's a relationship from the data that we see on climate. Climate is easier today than social. But in the case of climate, we can see the value of these impacts, and we can see how the markets are transforming. And so doing the work to make a good case on how does a company transform in their particular industry, what their footprint is today from a carbon perspective, what can they do about it to mitigate it over time as regulation comes in, as technologies change. And so our take on it is that we will be more successful on these issues if other investors come along. But it's our responsibility in each and every case to do the work and put the case together on why change needs to happen. And, you know, we're a purpose-built firm to do only this. We don't have trade-offs within our business. And so if it works for us to be the tip of the spear on these issues, and it makes it easier for others to follow on some of these issues, that's terrific. That's terrific for investors.
But you said you're the tip of the spear. I think that's a very apt metaphor. Did you, to get the Exxon story through, the three board seats, did you go to Vanguard and BlackRock directly and enlist their help? I mean, how did that all come about? Just give us a quick sense of that, because people wanted to know how the coalition was put together.
Yeah, and let me spend a minute on that. And then within Engine Number One, Charlie Penner led the Exxon campaign, and there's a lot of work ahead. And so I think there's an opportunity another time with viewers to go very deep on that. But I would say that the Exxon campaign was about doing the work, looking at an example of an industry, and energy is the prime industry where the world is changing. And for companies to make sure that they understand how things are changing, they have the right skills, and they can maximize their financial value over time, which it's a climate issue, but it's also a long-term shareholder value issue. We did the work, we put the data together, and then we took that data to everybody that holds shares in that company. And so it allowed other people to come along on an issue with us. Yeah.
Arnie, let me ask you about a broader ESG issue, and I get this all the time from investors and viewers of Etf Edge. The SEC Chair, Gary Gensler, has said he wants to take a look at the ESG business in general and how something kind of gets into or out of this ESG bucket, because there's not a lot of agreement on what exactly constitutes that ESG bucket. So there's a feeling that the first round of ESG metrics by some people really didn't get the job done. And we sort of need to advance this conversation about what is and is not ESG. In your opinion, is there going to be an attempt to more carefully define what ESG is in 2021, with or without the SEC prodding you?
Yes, Bob. I think the general heightened awareness on what qualifies or constitutes an ESG type of product is both needed as well as, from our perspective, very desired. And even within the broad spectrum of ESG products, you can have lighter green or darker green type of products. And typically the way we encourage investors to think about it is you have broad benchmark products such as S&P that really, give exposure to the broad-based market, but through an ESG lens and utilize good non-financial or environmental, social, and governance-related data points to construct a portfolio that is very holistic and can serve as a building block. And then on the other hand, you have more thematic exposures. You can have clean energy type of ETFs. You can have electric car type of ETFs. You can have specific themes that in and as themselves track a specific theme that could qualify as an environmental theme, or it could qualify as a social theme. And so there isn't that much consensus in relation to what is ESG. However, that heightened scrutiny and heightened awareness will lead to a heightened and elevated understanding of investors, and that, in our view, is very much a good thing. And we, as a product provider, as an asset manager, want to be here as a resource to help in that education process, to help with the transparency that is needed for investors to come to their conclusions in terms of which type of product is right for their specific portfolio and their specific purpose.
Yeah, Jennifer, you want to weigh in on that? I know Vote is not specifically in the ESG category necessarily, but you're in the ESG business. Would the whole industry benefit from a little more consensus on what exactly constitutes ESG? Because obviously the SEC seems very interested in this question. Yeah.
I think to Arnie's point, it's things are evolving and things evolve. And so our perspective on this is that sometimes for investors want to jump to the answer. They want somebody on their behalf to make these decisions. And so a lot of the ESG products that are out there to date, they take the weight of a company down, or they screen out potentially bad actors. And our view and what we're trying to do at Engine Number One is advance the ball a little bit and invest in these companies and help to transform them and drive them in the right direction. And so I think any degree to pin down a rating system or a category to a point in time is a little bit challenging. And in this space of linking, the social and the climate and the governance and turning them into economic factors that we can all use to make decisions, I think more conversation is great, but I think we're going to see a lot of evolution. In our view, is people want to be active, but they also want to drive transformation in these companies. So with Vote, for example, at Engine Number One, you're tracking the index, you're not tracking a custom index, and then we'll be active owners to drive these outcomes at these companies.
Yeah, I've been of two minds on this. And for the first couple of years, my thought was this is just all over the place and nobody can agree on anything. But now I'm sort of the mind that you should allow, as long as people clearly define what their goals are, what they're doing. I don't know why you would try to pin it down to some kind of specific formula. I don't necessarily think you can even do that. So my own thinking has evolved on that front. Arnie, let me just move on and ask you, the big knock on ESG in general has been, other than it's broad and hard to define, it tends to mimic essentially a big cap fund with a quality bent. So if you look at USSG, which you run, it's 20% Microsoft and Alphabet, and it performs very close to the S&P 500. In fact, within a percent or so. How do you respond to that criticism that you're essentially mimicking big cap quality funds?
Oh, Bob, I actually wouldn't see it as a criticism at all, personally. When I think about USSG as well as S&P, so both the comments go for both in the same way. Same for our small cap fund, SMLE, or the mid cap fund, mid-E. The whole idea behind those funds is to have an investment and profile, a risk and return profile that is extremely similar to the non-ESG benchmark of their respective segments. So when we look at the construction methodology, for example, of our USSG portfolio, the idea and the intent behind it is to have a roughly sector-neutral approach, but with significant elevation of the environmental, social, and governance-related profile. Similar for S&P, there we don't look at sectors, but we look at industry groups. So we are a little bit more granular than for USSG. And again, we look at every industry group, which are the top performance from an ESG standpoint of each industry group, and include those in the portfolio. The outcome really is, and the intent of those portfolios is to give investors something that they can use as, let's say, an S&P 500 ETF replacement, but elevate their ESG profile and not have to change, let's say, the investment process, but can do that as a plug-and-play type of solution.
Yeah. Jennifer, you want to weigh in on that? I mean, my point is, the ESG people or the investors always bring this up to me. Bob, the S&P is up 14% this year. The average ESG fund is up 14% this year. Arnie's, reply here is yes, but We own slightly different things than the S&P 500, so we're getting an equal amount of performance with a better ESG tilt. Is that the right way to look at it, or do you have a different way to look at it?
Yeah, I think anytime you tilt off a benchmark, you will have under or over performance. And I think the legacy first generation ESG rating systems, some years they're above the index, some years they're below. And so I think our view at engine number one is over time, we can work as investors maybe less with rating and screening systems and more understanding the fundamentals of each company and financially understanding how what they're doing on governance and workforce and climate affect their long-term return. But I do think that transforming businesses and industries to take impacts into account, it is a long game. It's not something where you should be judging that on quarterly performance. So I think that's an important question for investors, and that's why for engine number one we went with the strategy we did with Vote, where it is the index, and if you're owning those shares, we can then be very active and activist in helping those companies transform over time.
Yeah, very good point there. Less ratings and screenings and more activist investing. That certainly seems to be what you're all about. Fascinating conversation. Everybody, that does it for this week's ETF Edge. My thanks to Jennifer and Arnie. We have asked Jennifer to stick around just for a couple more minutes. I want to get a little bit deeper into engine number one's strategy for the coming year on our ETF Edge podcast. And remember, you can see all of our shows, all of them, on the website, etfedge.cnbc.com. Everybody have a healthy, happy, and safe trading week.
Get the ABCs of ETFs with the Etf Edge Newsletter, your weekly update on the hottest trends in the nearly $4 trillion market of exchange-traded funds, expert analysis, actionable ideas, and exclusive insight from host Bob Pisani. Sign up now at cnbc.com/ETF Edge Newsletter.